So the S&P 500 just hit another all-time high, and right on cue, people are calling for a crash. You got one side saying this is the top. You get the other side saying we're just getting started. So what is actually going on? Let's break it down. Why the market is hitting new highs, why short sellers keep getting it wrong and keep crying, and what you should be doing right now. So why the S&P 500 hit all-time highs this past week? Really, it was all about earnings. So the last week of April was absolutely loaded with reports, and this is what pushed the market higher. You had the biggest companies in the world reporting all at once: Microsoft, Amazon, Alphabet, Meta. These companies alone make up a massive chunk of the index, and they delivered. Then you had like Apple, Caterpillar, Eli Lilly, MasterCard, and obviously the energy giants like ExxonMobil and Chevron with oil. Across the board, results were strong, or at least better than expected. And that's the key. Markets move on expectations, not on headlines. Everyone's pushing, the Iran war, we get it. Oil, we get it. But on top of that, earnings growth is accelerating, and it's driven by AI. At the end of the day, AI is driving us. You got massive capital flowing into the market through retirement accounts and ETFs like SPY, which are constantly being bought. And despite all the fear out there, the economy hasn't broken. Consumers are still spending, companies are still growing. So when you combine all of that, strong earnings, strong demand, future growth expectations, that's how you get all-time highs. So the short sellers, right, they're crying about it. This is like one of the most hated rallies I've ever been a part of. So why were they wrong? At the end of the day, shorting a market like this sounds smart until you actually try to do it, right? The big problem here is they're fighting the trend, right? There's a ton of momentum, right? The market's going up, and betting against this upward trend is consistently one of the fastest ways to lose money and blow your accounts. Second problem, timing. A lot of the shorts weren't wrong. They're just way too early. And in the market, being early is the same thing as being wrong. And finally, there's constant demand. 401k contributions, ETF inflows, institutional money, a lot of people propping up the market, all buying all the time. Even when there's a downturn midday, it still recovers. So this creates a natural upward pressure, and finally, fear sells. Headlines will always tell you recession, war, collapse, but price tells you the truth. And right now, prices are going higher. So, short sellers aren't always wrong, and they will be right eventually. But they're wrong longer than most people can stay solid at the end of the day. All right, so what should you do? I would say at worst, hold. If you're already invested, the biggest mistake you can do is panic sell highs, right? Because strong markets tend to stay strong. At best, I'd be out. You don't need to go all in, but you can dollar cost average any pullbacks and weakness, drop a couple percent, add a little bit, but stay consistent. And most importantly, zoom out. All-time highs aren't rare. They're always high. They're normal. The market spends a lot of its time making new highs, so stop trying to time the exact top and start focusing on staying in the trend, because the biggest mistake is not being in the market at all. If you miss these big days, you're going to miss, and you're going to impact your financial future forever. So here's the bottom line. All-time highs aren't a warning sign. They're a sign of strength. So stay invested, right? Ignore all the noise. Keep adding, right? At the end of the day, the market rewards patience, not predictions. Don't listen to people on X and, any other social media saying, hey, this is the top. Don't trust them, right? They don't have accounts. They've blown all their accounts. At the end of the day, all you can do is do what's right for you and your family. And what I'm doing is I'm holding and I'm adding. Appreciate you guys listening. Look forward to seeing what happens this week. My prediction, slight pullback tomorrow, flat Tuesday, Wednesday, recovery up by the end of the week. All right, guys. See you next week.